Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about the top 3 best technology stocks to buy right now, in which this Motley Fool author thinks that these 3 companies can make you a millionaire by 2030. So we're going to go over these companies, what these companies do, the price targets for these companies, their growth trajectory, and if these stocks could actually make you a millionaire. For more videos like this one, remember to go and smash that like button right now, subscribe if you are new, comment your thoughts down below about these companies, and without further ado, let's jump right into today's video. So as we all know, if you are an experienced investor, is that the largest gains come from the stock market over the long term. So investing into good companies from the beginning so you can experience that long-term price appreciation is absolutely imperative to building wealth over the long term. So this Motley Fool author thinks that he has identified 3 stocks that we are going to discuss today that could literally make you a millionaire. So let's see how plausible this is. The 3 companies that he has identified, which are all very good companies in my opinion, are Nvidia, ticker symbol NVDA, Snowflake, ticker symbol SNOW, and Palantir Technologies, ticker symbol PLTR. So let's see if this is actually achievable with these companies. Right now, the NVDA stock trades for around $270 per share, while the low-end analyst price target for the company is $177. The average price consensus among professionals is $340 for the next 12 months, and the high-end bullish price prediction is $400 per share. If you didn't know, Nvidia produces semiconductors, which are advanced computer chips that power digital goods like smartphones, gaming consoles, and even vehicles. And the demand for semiconductors is absolutely at their all-time high right now, and Nvidia is one of the best-in-class producers of these semiconductors. The company is also very well known for their graphics cards, also known as GPUs. And these cards are used in a plethora of futuristic technologies such as augmented reality, virtual reality, self-driving vehicles, and of course PC gaming. So clearly Nvidia has a huge advantage, especially because the global supply chain is constantly running short on these products. To put this into perspective of just how lucrative the company of Nvidia is, they sold around $3 billion worth of just gaming-related graphics cards, not including any of their other segments which can also use these graphics cards, and this would represent an 85% increase in the same quarter from last year. And if we assume Nvidia's price to sales multiple or ratio remains constant, they can grow their revenues by around 20% from now until 2030, and this would increase their overall stock price and their revenues by around 5-fold from here. Therefore, you could turn $200,000 into $1 million starting right now. Now, if $200,000 is too expensive for you, don't worry, we have 2 other stocks on this list that could help you achieve $1 million before 2030. However, in my personal opinion, I don't think it's very realistic for this author to say that someone can become a millionaire by investing into Nvidia right now, because the majority of people don't have 200K lying around. I also don't think that it's very realistic to assume that Nvidia's current price to sales multiple is going to remain constant. This is a fluctuating ratio, so we really don't know if this is even going to happen. But I will give the author credit that he does say Nvidia is a good company, which I 100% agree with, and we know this from their revenue metrics. For instance, for the fiscal year of 2020, they brought in around $10.9 billion. However, for the full fiscal year of 2022, they're estimated to bring in around $25.7 billion, which is a compounding annual growth rate for their revenues of around 53%. And if that can be successfully reflected in their stock price, that would be absolutely amazing. I also want to mention, just like the author is saying, that Nvidia is extremely profitable. They delivered a record high $6.90 EPS or earnings per share in fiscal year of 2021, which represents around a 53% growth rate compared to their fiscal year of 2020. The company also paid out $395 million in dividends throughout that same year. So the company is not only extremely profitable and they are giving out $1 million worth of dividends, the company still has astronomical growth that they have yet yet to achieve as of right now. So overall, this is a very solid company. Also, the various segments that the company operates in, such as the use of their technology for automotive and vehicle makers, could create a very large growth driver over the long term for this company. Secondly, I want to mention that the augmented reality and virtual reality technologies will be heavily reliant on the various products that Nvidia makes. So these are two huge opportunities for further growth in Nvidia right now. So that is to say that this company is still absolutely phenomenal, and the stock price has been appreciating very rapidly recently, which either means we are going to experience a pullback or it could continuously trend upwards. But always make sure to do your own research before investing in any companies. The next company that the author points out is Snowflake, ticker symbol SNOW, and the SNOW stock price currently trades for around $230 right now. The low-end analyst price target for the stock over the next 12 months is $210, and ideally we would want the current stock price to be trading below their low-end analyst price target. However, the average price consensus for the company goes as high as $326 per share, and the most bullish price estimate is $575 for one single Snowflake share. The author believes that Snowflake is a disruptive, innovative company that could provide immense returns in the next 10 years. The reason for this is that many organizations are capitalizing on the shift toward cloud for data storage, and Snowflake is literally a data warehouse provider where they can collect and store this data to use at a later date. Snowflake competes directly with Amazon Web Services, Microsoft's Azure, and Alphabet's Google Cloud, but Snowflake has a major competitive advantage compared to these other companies. I personally like Snowflake. I do think it's a very good company. However, I do think that they are trading at a very, very high PS ratio and price to sales ratio right now, and we will get more into that later. Snowflake does have a decent customer base, with 116 of these customers spending over $1 million on their platform. And this has helped the company scale their revenues by over 103% year over year, up to $272 million for that second quarter of 2021. Its net retention rate also sits very high at 169%, which is more good news. This means that customers are spending more money than they did in the prior year on their products. So not only is Snowflake maintaining their existing customers, but the customers that they already have are doubling down and wanting more from Snowflake, and that's always a fantastic sign to see. Now, with that being said, I do want to talk about two drawbacks that I do see with the company, but I do think that the company is good overall, but I want you to know both the bearish and bullish news for this company. So the first problem is that the company's operating loss is 58% of their revenue, and it's valued currently at around 110 times their sales. With that being said, the company is executing on all of their promises, and they are growing extremely rapidly. They are also a part of a gigantic addressable market, which gives them a fantastic growth runway into the future, which does give investors the potential to turn a very small sum of money into $1 million. However, again, I don't think this is necessarily realistic for the majority of investors, because at minimum, someone would need to invest around $100,000 into Snowflake stock 4 to 10x by 2030. And that's if everything literally goes perfectly, which I don't think that we should assume. So I would actually disagree with the author on this particular stock. But that's not to say that Snowflake is not a good company. I do think Snowflake is a good company. However, I would want to buy it at a much cheaper valuation rather than buying at a premium of around 110 times their current sales. Now, the really good news is that Snowflake currently projects that companies around the world are going to increase their cloud spending, which they believe will increase by around 235% by 2025, which means that their total addressable market sits at around $356 billion annually, and that is a huge addressable market, and I think Snowflake is going to achieve a very large market share of that total market. So overall, it is very good news for Snowflake. However, like I said before, I don't think that the author has any grounds to say that this company will literally 10x in the next 7, 8, or 9 years. This move moves us on to our last company, and this is a company that I report on very often because you all seem to love it. So for more videos on Palantir Technologies, remember to go and smash that like button right now. Now, I personally own Palantir Technologies as well as the other two companies mentioned on this list. However, I actually own Palantir more than the other companies mentioned on this list. Palantir right now takes up around 4% of my overall portfolio, and overall I think it has good long-term prospects. However, if you are an investor that thinks that this company is going to achieve great stock price appreciation in the short term, mainly in the next 3 to 4 years, I don't think this is going to be the stock for you. I think this is a long-term play, and I believe investors should only invest into this company if they are willing to hold it for the long term. Currently, the PLTR stock trades for around $13 to $14 right now, while the low-end analyst price target for the company comes in at $9 per share because analysts really don't like Palantir stock for whatever reason. Their average price consensus among professionals is $15 per share, so we see a slight amount of upside. However, if you're extremely bullish on the company and you think that the company could reach $25 per share in the next 12 months, you could literally almost double your money with Palantir Technologies. However, what would Palantir Technologies be worth by 2030? Well, I have actually already done videos on this of how much money you would need to invest into Palantir Technologies to retire by 2030. But again, it's not going to be realistic for the majority of people watching this video. So again, I would have to disagree with the author yet again. Palantir is not going to make you a millionaire in the next 8 years unless you put in loads of money into this company. However, that's not to say that Palantir is not a good company. I still really like Palantir Technologies, but I think this author is misleading people. If you didn't know, Palantir Technologies solves the data problem which most organizations and enterprises face currently. They basically analyze and extract data, which can be extremely difficult. However, they make sense of this siloed data, and enterprises make good decisions. Palantir Technologies serves both commercial clients as well as government agencies, and they are involved in big data analytics. This enables data scientists of these companies to build powerful artificial intelligence models, which can help these companies determine what their next move should be. Palantir is very well known for working with the US intelligence community, including the FBI, the CIA, and the Pentagon. They also have other contracts with the US Special Forces, the US Army, the US Air Force, and the Coast Guard. They are involved in a plethora of fantastic government contracts that will continuously get them stable revenues, and the reason why Palantir can infiltrate into this particular market is through their Gotham platform. On the other hand, they have their Foundry platform, which is used for their commercial enterprises, and this is actually the part that I am most bullish on. I like their government contracts, but they have been serving government clients for years. But the real bread and butter of Palantir Technologies, I believe, is going to be their commercial segment. This is going to be the thing that turns the company profitable, and we've already seen adoption of Palantir's Foundry platform across 40 different industries. This allows companies to monitor their supply chains. It empowers pharmaceutical companies to accelerate drug discoveries. It also allows financial institutions to identify money laundering and fraud. So this can work across a plethora of different industries. Basically, if a commercial enterprise uses data in any way, Palantir Technologies can be used by that particular company. Palantir also differentiates itself from other companies in a very exclusive way. For instance, they work on a plethora of classified projects and programs, so they are very well trusted. On top of this, their software platforms are extremely secure. This allows Palantir to work with a plethora of different government agencies, and this will also allow them to achieve more contracts in the future, even if classified data needs to be interpreted. So Palantir is extremely diversified and secure, which allows very top secret organizations to use this company. On the other hand, I really like the commercial adoption that Palantir's Foundry platform is currently experiencing, because eventually I believe that their commercial platform will outpace their government revenues, and this is going to be the key to Palantir's long-term success, at least in my opinion. So with that being said, that means that Palantir is a good long-term hold, but like I said earlier, if you want to get rich quick off of this stock, this is definitely not the stock to use. If we look at their financial metrics and customers, we can see that their customers grew by around 23% on a compounding annual growth rate basis from 2020 to 2021. They also increased their revenues from 2020 to 2021, going from $900 million to around $1.3 million, and for the full year of 2021, they brought in around $1.5 billion of total revenue, which means that they are expanding their revenue over a rate of around 30% each year, and this is anticipated to last until 2025. Lastly, I want to talk about Palantir's market opportunity, because we did the exact same thing for Snowflake, because Snowflake has a giant addressable market. However, Palantir does have a smaller addressable market, but there are also less players in this particular space. At least less players that can actually replace Palantir's software. Currently, Palantir's management projects that the current market opportunity for the company is around $119 billion, which is a far cry from the company's current market cap, which is just over $28 billion as of right now. This means that for organizations that hope to capitalize on powerful data analytics tools that Palantir offers, they need to get in right now, because by 2030, this addressable market is intended to absolutely explode. It's going to be worth many hundreds of billions of dollars, which makes getting into Palantir Technologies right now an extreme buying opportunity according to their overall market opportunity. So this depends on how much market opportunity that Palantir can steal away from other competitors, as well as how big of the piece of pie that Palantir can actually obtain by 2030. The author says at minimum, Palantir Technologies could grow by around 5-fold by 2030, which means that investors would need to invest around $200,000 to become a millionaire in the stock by 2030. But like I said, for the other two companies, this is unrealistic for the majority of investors right now. Not to say that any of these companies are bad, all of these companies actually have great growth prospects ahead of them. However, to say that you could become a millionaire off of these companies by 2030, I think is just slightly misleading. But with that being said, I would love to hear your comments down below. Comment down below which company you like best between Snowflake, Palantir, and Nvidia. Smash that like button right now if you haven't already, especially if you want more Palantir Technologies videos. Subscribe if you are new, and I will see you in the next YT video.